Welcome guys, another episode of Your State of the Market. I'm Marc Fattore, Jennifer Dolh as always, and we bring to you guys a set of fantastic questions that are brought to us from you guys, and of course we answer them as best as we can. So Jennifer, take the floor.
Today's questions are by myself actually.
Fantastic, there you go.
So I'm going to ask you some questions today, Marc. I need your responses. So first question, if you look at Sydney auction rates that have increased this month,
Yep.
For example, 1st of October, it was sitting at 56%, now it's sitting at 62%.
Yep.
Equally with Melbourne and Adelaide sitting at 75%, which is huge. Why have auction clearance rates bounced back above 60% all of a sudden?
Well, good question, Jennifer. And I think we can probably put it down to a couple of different factors. First one is probably less stock on the market. Okay, I think that would probably be one of the major contributing factors, is that when we do have less stock in the market, we look at auction clearance rates. They are based on what was cleared or sold on the weekend. We understand that, from speaking to some agents and things like that across the last few months, that there is a decrease in listings, and obviously even if people are listing, of course what we are seeing is that the amount of properties that are being sold over the last few months have been a lot less. So, I don't have the exact statistics, but I'm only making that assumption, of course. But regardless, I think we're going to see a little bit more of an influx of listings coming in towards the back end of the year. Naturally, we shouldn't see that, but I think because of what we're seeing with interest rate rises and whatnot, people in some instances are obviously feeling the pinch and probably looking to just exit safely now while they can, rather than letting it get too late maybe in the new year or waiting that extra 6 months. It could be a little bit more detrimental to them. So it could be a couple of factors there, but I think those are probably the main contributing ones there.
Yeah, awesome. Majority of houses now are going through auction anyway, from what I've seen. So secondly, despite the RBA efforts to curb pricing, the undersupply of lots have sent Sydney's house and land prices soaring, and this can be further resolved by rezoning. The only way to curb pricing is to rezone the land and resell the lots, from my opinion. Why do you think the government is not doing this?
Again, creating a form of supply and demand. Simply put, I think what we like to see here is if we obviously flood the market too quickly, what is going to happen to the market? I think we're going to see a massive downfall and a massive crash. The reason why we have been curbed in recent times, or at least now, is because of the fact that cost of living, inflation, let's say, things like that, plus interest rate rises. It's tightening the market that way, but it's not tightening the market because there's no demand for real estate. This demand is still there. We still see quite a lot of demand here every day. But more importantly, I think we're going to see more and more councils, let's say, or government bodies, holding on to releases of land, because at the end of the day, you got to understand something as well, is that as a government body, and I may not be correct in saying this, but as a government body, stamp duty is obviously, charged on almost every transaction that we see in this case, right? Bar obviously the first home buyers and so on and so forth, depending where they are. Now, as a government body, we've given away a lot of money over the last 2 years, let's say, with COVID payments and things like that. So the government needs to start recuperating those costs as well. They're not just recuperating that from real estate, they're recuperating that across all tax forms and whatnot. But this is obviously one portion and one way that I'll certainly be able to do it, by charging higher price points on let's say, land, for example, because of the fact that, if it becomes more scarce, it becomes more, obviously, the higher price is driven up that way. So, look, again, could be a bit more conspiracy theory than the right type of answer, but I think what we are going to see is that there's going to be a constriction on land releases, and obviously, new dwellings going up over the next few years, because of the fact that, if we dump it all in the market straight away, all of a sudden that demand for real estate will be lost.
Great. Okay, last question. In the eastern suburbs of Sydney, we are still seeing high value sales. Why isn't the top end of the market correcting, and why are the ultra wealthy still buying real estate?
I think it comes down to one thing in this market. If you can service debt, which a majority of the 1% can, let's say, then it's not going to stop you from continuing to acquire. And obviously now is the right time to buy, as much as people may sit on the other side of the screen there and tell me that I'm an idiot for saying that, but it is the truth. This is the time to buy, is when everyone is starting to disperse and walk away. Now, what we are going to see is that, if we look at Australia, it's not made up of one big market, or let's say 7 big markets, let's say major capitals. It is made of thousands of different markets and across different, let's say, asset classes as well within real estate. So, of course, if we look at the eastern suburbs as an example in Sydney, we may not necessarily see the prices skyrocket, but we might not see them go below the flat line either.
Yeah.
Okay, very different story if we were to look in, let's say, the western suburbs of Sydney, where there is, let's say, less affluence, things like that, or less servicing abilities, let's say. And what we're going to see there is that with those implications, people now all of a sudden that had $1 million borrowing capacity can only afford $800,000. When vendor wants $1 million for the property, that's where we're going to see, a discrepancy or a decline in market demand, and obviously, growth rate within certain areas. So, when we're comparing very different places across the country, let's say, it can't really be put in place as a complete. How do I put this? You can't compare real estate by looking at, let's say, one part of Sydney and another part and say that gives you a very complete real estate picture.
I agree with
Hope that makes sense.
Yeah, I agree with that. As always, guys, just by now, if you want to comment your questions below or send us a message directly, we're happy to answer them next week. But it's been your Tuesday State of the Market, and hope that you have a great week ahead. But yeah, enjoy your day.
See you guys.